Ifeoma, thank you so much for your time. But before we get into how the market performed this week, let's first get that breakdown on what to expect from the liquidity angle next week.
Thank you, Kenneth, for having me. So from next week, from the 15th, so like you said, we'll be having a huge inflow. The 2021 FGM bond maturity would be paid down, and that's about 561.05 billion. We also have several bond coupons this July, totaling about 199.36 billion, as well as several treasury bills maturities. So, yes, like you said, this huge inflow of maturities to the system would propel a bullish reaction as investors look to reinvest their inflow of maturities and liquidity.
All right, let's get into how the market performed this week. I would like to start first with the OMO auction we saw on Thursday.
Okay.
It's been 2 weeks without one, but how did the investors react?
Well, there has been general illiquidity in the market, so that spilled into the OMO auction window. After 2 weeks of non-issuance, the CBN finally issued an OMO auction yesterday. They offered 20 billion, but unfortunately, they were only able to raise 17 billion out of the 20 billion they offered.
All right, now looking at how the week played out, though, let's get the thoughts on what played out in the currency space and also the bonds.
Okay, the currency space was generally very quiet, apart from the CBN regular IME intervention. However, in the bond market, there was marginal improvement in demand compared to last week. And as the week progressed, we saw this demand slow down. The most active bond traded were the 2045 as well as the 2050 bond. They suffered from selling pressures and traded around 12.1 and 13% levels.
All right, but let's get into the secondary market for bonds and how did that play out?
Yeah, that's what I just said. So, like, there was marginal improvement in demand.
Okay.
We actually saw the market being very active this week compared to last week, and most of the long end of the bond benchmark curve was the one that was traded, 2045 as well as the 2050 bonds.
All right, but for the T-bill space, where we've seen activity on the curve?
Very, very bullish. Very, very bullish. Due to the general shortage of liquidity, we saw players sell down in order to raise funds to fulfill their obligations. And due to increasing yields in the market, players came to take advantage of that. So we saw very bullish sentiments in the market this week. August, September bills were very traded, especially the CBN August 31 maturities, as well as the newly issued NCD PME auction, that's the 30 June maturity, which was trading around 8.5 and 875 levels.
All right, well, going into next week, we expect about 109 billion to be rolled over in the Treasury bills auction next week.
Yeah.
What can we expect?
We would expect very, very high subscription rates. In addition, the House of Assembly just passed their stuff. They didn't just pass it, but they proposed a supplementary budget of about 800 billion, while the Senate added an additional 100 billion. So if this supplementary budget is passed, we would expect the federal government to come to raise the bulk of it in the domestic market. And that will spill over, into the fixed income space, treasury and bond space. So that will likely spur plenty demand if that supplementary budget is passed. So going into, from next week, this month, and going into H2, we expect a lot of activity generally in the fixed income space.
All right, Ifeoma, but besides the PMA next week and the huge inflows expected for you, what are you looking forward to?
Increasing yields, to be honest. Like, there's still illiquidity in the market. So the huge inflow of liquidity is going to come from the middle of the week. So at the beginning of the week, I still expect some selling pressures, and then yields will increase. And then from the middle of the week down to the end of the week, and then to the end of the month, then we'll see a decline in yields, and we'll see more bullish reactions in the market.
All right, but what's your call for inflation? We're expecting that could come out sometime next week or a bit further down.
Well, last month's inflation data was a bit surprising since there was a little decline. So I expect to be very surprised. You would think that with general complaints on how high prices are rising, how high consumer prices are rising, that will reflect in the inflation figure. However, it declines to 17.93. So I expect to be surprised. I'm not exactly sure whether I would see an increase or a further decrease in when inflation data is released.